Landlords' pockets have been squeezed over the last few years due to rising finance costs and costs associated with being a landlord. Due to this, landlords have been looking at alternative ways of increasing their cash flows. One area is looking at a long-term lease agreement with a professional operator. In this video, I'm going to explain what a corporate lease agreement is and what lending options are available to you. My name is Gindy, I'm one of the senior advisors at Create Finance, so let's get into the video. At the beginning of the video, I mentioned professional operator. So what is classed as a professional operator? You could say it's a local housing association, a partner of the government, or a charity. There is a need and a requirement to find housing for those tenants that could be deemed as vulnerable. So what are the benefits of having a lease agreement in place? These lease agreements tend to be over 3 or 5 years. So what that means is you've got guaranteed rent over a 3 or 5 year period, and what this avoids is rental voids for you. A number of these lease agreements also come with percentage increases every 12 months to make sure that you're getting the market rate. Some, however, may be higher than the open market rate, which actually means that you're actually getting more rent for that property than you would letting it out with a standard estate agent. These agreements also tend to cover the cost of the utility bills for the property. So currently in this economic climate, you've got rising utility bills. The lease agreement will cover the cost of them utility bills. And some of these lease agreements will also cover the maintenance and the repair of the property, which gives peace of mind to the landlord. The professional operators that provide these sorts of lease agreements will normally tend to house the property with vulnerable tenants. Vulnerable tenants could be deemed as those with a disability, of a refugee status, or an asylum seeker. Historically, lenders have shied away from lending on the property which houses vulnerable tenants. The reason for this is due to reputational risk if they ever had to repossess the property, or issues that may arise if they have to evict the tenant. However, as new lenders have now entered the market space, what you find is that lenders are now open to lending to clients who have a lease agreement in place. Lenders will insist that the lease agreement isn't any longer than 5 years, and also to make sure that there is a break clause in place if the landlord wants to take back the property. The lease agreement will also be reviewed to make sure there's no onerous clauses in place to the detriment of the lender as well as the borrower. Now let's look into the types of property that this sort of borrowing may be applicable on. This isn't just limited to a standard house. What you may have is a house of multiple occupancy, so you could have 4, 5 or 6 bedrooms in one property. You may also have a multi-unit freehold block, so you could have 4, 5 or 6 apartments in one block. Lenders are okay if you have a lease agreement in place for these sorts of properties. So what sort of deposit and what sort of interest rate would you expect on this type of borrowing? Well, depending on market conditions, you can get a mortgage of up to 75% loan to value. Could be higher potentially, depending on lender availability. The interest rate may be slightly higher than your standard mortgage borrowing due to the risk that the lender is taking with the type of tenant. Currently, there's a limited number of lenders that will lend on a corporate lease agreement. It's very, very important that you are speaking to a mortgage broker, as a broker will be able to access the lenders that will be able to lend on this sort of agreement. Corporate lease agreements are available if you're buying in personal names or through a limited company. To learn more about limited company buy-to-let mortgages, please check out this video.